time I've been coming to conferences in Ukraine, Igor, that is the best session ever, the oligarch session. I mean, congratulations. I mean, to get that panel up here was remarkable. I mean, it's interesting, it's the Game of Thrones session. It's almost a Game of Thrones of oligarchs. And I'm just wondering, in the end, which one of those is still standing, right? My feeling is the guy at this end seems to be the guy that's most likely to be still operating. But it was almost like a, X-Factor oligarch Ukraine, right? I mean, it's incredible. So thank you very much. I was slightly disappointed Mr. K didn't come, but to be honest, these guys knocked it out of the park. I mean, it's fantastic. So well done, and well done for organising the session. He was sleeping, and the Gontareva text, that was pure genius, I have to say. Well done. Good session, anyway. Look, anyway, let's get on. International Investors Panel. The investors, I have to say, it was a great session. I left slightly concerned, actually quite significantly concerned listening to some of the guys on the panel. So let's hope my colleagues, fellow investors in Ukraine, don't necessarily have the same opinion. Anyway, let's just go through the panel. On my immediate left is Markus Schneider, sovereign analyst at AllianceBernstein. I forget how much you're managing, 400 billion or something like that, I think. AllianceBernstein, probably give or take odd 100 billion. Next is Andrei, Rodzianko, MBA Canyon. Again, it's not a bragging show in terms of how much we're managing, but I'm sure you guys manage a quite big wad of cash. And you have Ukrainian heritage. Obviously, you have Ukrainian heritage with your name. Anyway, next along, we have, am I right to say Macedonia? Or do I need to say some derivative or otherwise of that? Anyway, we have Macedonian, Dimitar, Bogov, lead economist from EBRD in Kiev, and I think it'd be quite interesting to give a regional and international perspective from the EBRD. Next along, we've got John Patton, MD at Argentem Partners. And finally, last but not least, we have IFC Jason Pellmar. Apologies for my whatever. Anyway, I wanted to start actually. I was going to actually let Dimitar kick off, but actually the panel for me, the early panel, was just so extraordinary. I've never seen anything like that in terms of coming to Ukraine. I just wanted to run through the panel and ask, their perspectives on that, and maybe beyond that a little bit in terms of, you obviously heard oligarchs, and actually you heard the morning session as well, sort of macro, and then obviously some corporates as well speaking. I mean, what's your take out? I mean, I guess it's an investor conference. It's trying to send a message to the world about Ukraine's a great place to do business. But I mean, what did you take out from the panel we just had? Markus. I think you just speak in it.
That's right. Okay, perfect. So, what was my main takeaway? Well, actually, my main takeaway was that I agreed that we shouldn't be too scared of government, but perhaps private sector business interest. No. On a serious note, look, the reality is that we do have now in the Ukrainian environment where you obviously see quite a significant political change. You have someone coming pretty much from the outside, that we have seen in France coming now, to very head of the government, President-elect Zelensky. And from a personal perspective, it is almost natural that you have a certain steering within the business group and certain business interested within the country at a time when you also have quite significant political change at the very top. So, as we know, Ukraine has a very wide spectrum of private sector interests, and if you hear opinions about the banking sector and the role of the national bank in a post-Poroshenko environment, I think it's part and parcel of the national debate. I think at least from a top-down perspective, I think coming into office, and I think it was very, very encouraging seeing Mr. Pellmar speaking this morning. I personally have great respect for him, and that at least from a foreign investor's perspective, the hope is that a certain orthodoxy within the policy-making framework will be maintained. But are there going to be negotiations, within the business groups? Of course.
I was going to say Dr. Shirago. I assume he is a doctor, but Mr. Shirago. Did it worry you a little bit? I mean, for me, listening to the hindsight view of the banking sector story, it was very disturbing. That kind of view that it was basically the regulators. I mean, you responded very admirably, I think. But this idea that it wasn't the fault of Ukrainian bankers or business people, essentially, it was a terrible resolution process, and do you buy that? I mean, obviously, I doubt you do buy it, but does that make you worried about people in big business here who still have those rules?
Oh, it is very worrying indeed, there's no question about it. But I'm just trying to look it through the lens of, I guess, the latest political developments that are taking place, and that just certain interest groups are trying to push their side of the story. And as I said, the hope is, at least from the very top, certainly it can be kept on those developments.
I have to say, and I hope I am not undiplomatic. I usually am undiplomatic, so I may as well say it. But I find it extraordinary, to be honest, that you had 3 or 4 oligarchs making speeches, in effect, and the audience were clapping. I just found it, no one clapped when we spoke in the first session. I was very disappointed. But it was almost like, these guys were appealing. I mean, we've got TV cameras. They're appealing. Elections are coming up. They're appealing to politicians maybe to get on tickets. But it was very populist, right? So it's a very populist kind of, aside from one person, I thought. The rest of them were kind of strange. Kind of, I did find it a bit unusual. But anyway, maybe I'm unusual. But Andrei, what did you make of it?
Sure. So, yeah, I guess I would echo that. Thank you to Igor for putting together such great panels. I found it very interesting that I guess the vice speaker of the RADA came up and blamed the business people for stagnation. We had the business people up here, pointing the finger right back at government. I think in terms of what the businessmen were saying, I think there's a lot of truth in that. And part of the argument is that look what happened to GDP growth. Right? We cut off the credit to the economy. It's not being replaced, it's not coming in from other sources, and it's not that surprising that GDP has come down as much as it has. And I think from the perspective of the RADA, it's also remains a very complicated political situation where you will have still a lot of different factions. And, what are we going to be doing here probably for the next 3 to 6 months when they declare the next parliamentary elections? It's going to be a fight to maintain that influence in the RADA and keep that influence. So, does it mean that we're going to see populist messages? I think we will, right? That's part of it. Is there some risk around that? I do see some risk around it. Is there a very good long-term story here? Someday eventually, I think there is. Right? But it's it's going to take some time, and it's not going to be in a straight line. So that's sort of my takeaway, and I was, I guess, pretty impressed how open that last panel was with the oligarchs. I think it's rare. Usually you go to a conference and people are telling you this is so great, buy this and that, and I think it was a very open discussion of, look, there are these opportunities, but there are also quite a few problems that need to get through. So I found that quite refreshing that at least that's being discussed openly, and sort of that, let's say, that emphasis on moving towards more professionalism and a bit less sort of rhetoric and let's say things that can get in the way of professional decision making.
Dimitar, I'm probably going to jump. I'll probably come back to you if that's okay, because I'm not sure you feel necessarily commenting on oligarchs, on an oligarch session. I'm hoping, John, you've got some interesting views on this one.
Set it up for me to have interesting views. Thanks, that's good. I think a couple things I took away from that. Number one, choosing your partner is essential. And I think that point was made by Mr. Tigipko, but and I think in looking at that panel, there were some of those for whom you would say were terrible choices as partners. So no names listed. I think we've had very good success here in doing even very difficult restructurings because of partnerships we've chosen to make. So I think some of that might be luck, but certainly you can tell when they're good faith people, and there are plenty of them in this market. So we've had no issues there. The other thing I would say though is, reforming the banking sector is one of the key things that's worked here. You said that at the beginning. It's one of the key things. The MBU, the professionalism of the MBU is really a star on the market. And I think for all the foreign investors here, I would think it's something you look at and say, maybe things have changed. And in my opinion, things definitely have changed. And I think it's more like the previous panel maybe. But I think Valeria did a great job. And if you think about the idea of all these oligarchs having banks, using those banks, taking depositors' money and funding their own businesses for their own gain, it had nothing to do with job creation. It had nothing to do with some of the great and grand things that they talked about. So, of course, it's going to be painful to remove those from the market. And that's the other problem is what Danilo said earlier, and that is that the state banks have lots of NPLs that need to be resolved, but everyone's afraid to make decisions because as soon as they make a decision to sell an asset at a discount, they risk being prosecuted for that. So I think there's some fundamental things that still need to be done, but at the same time, it seems to me the hardest steps have been taken in a certain way. Fixing the banking sector was a major step, and it seems to me that it's been done very successfully. So I mean, I don't necessarily share your concerns because, frankly, I don't really care what Gerardo thinks about his former treatment because I totally don't agree with it. And the same goes for the gentleman on the far end of that last panel. So I just, I think that the oligarch opinions are less important than they were some years ago. But by the same token, not every oligarch is bad. I mean, that's not right. Because I think if you look at the businesses owned by STM, and often Ahmedov is pointed to as a guy who, has a significant portion of the economy, and therefore there's issues, and of course it's easy to target people who have been successful, but every one of the companies in that group has real management that makes real decisions, and those decisions are made in good faith. So all of us have had experiences in this room who've been invested here where things were, maybe they were difficult, but they worked out in a way that was fair. And I think that's a fundamentally positive thing. So I don't think we should paint the broad brush of oligarchs, nor should we paint the broad brush that it's a concern, because I think some of those opinions expressed were really opinions for their own behalves.
Actually, before we move on, it's possibly interesting just for the audience benefit to, there's a few foreign investors here, but we all do different things.
Sure.
So could you just detail equity, debt? Specifically, what are you investing in Ukraine?
Well, I think a few years ago we were investing in bonds at a discount because everything was at a discount in 2015. So we were investing in distressed assets. And that became more like special situations. And today, as I was saying earlier, we look at more like private equity-like things because now this market is still cheap. So there's opportunities, but they're not distressed debt opportunities in the same way. Now, there are DGF things, but in our particular case, we try and focus on larger corporates. Not SMEs necessarily, just because we're not set up for that. So we're a corporate investor in whatever form, equity or debt.
Andrei, just...
Sure. So we invest in global emerging market corporate credit mainly, but we also do some investing in local currencies and sovereigns, and I would say a small amount of equities. And in Ukraine, I think we've been very successful in the public bonds and private loans. And right now our position is probably more on the liquid side than it's been in previous years. We are mainly in some of the top tier corporates in Ukraine. And I think in terms of positioning, it's probably a bit sort of market weight to slightly light side.
Markus.
Yeah, AllianceBernstein invests in global equity and fixed income markets. I personally work on the emerging market sovereign debt team, and my specific focus is EMEA sovereigns.
Okay. So BlueBay, we're sovereign, corporate, external, hard currency. We are invested globally, everything across the spectrum in Ukraine. We'd love to do NPLs here, but the auction, it was interesting this morning, or the session just before, when the suggestion was there were great opportunities in the NPL auctions. Right. it seems to be certain preferred bidders seem to get best choice, I would say, in those auctions. So not necessarily level playing field. Let's. I don't know, Jason, if you wanted to comment on the panel earlier, or
happy to come in briefly. To me, the takeaway was, regardless of where you sit, whether you're a big business who happen to be in Parliament as well, government, the themes that were arising were all the same. The investment community in particular wants credibility, right? This was a message that Alexander Van Luke had stressed as it being a priority for the new administration, that for people to put significant capital to work, they're going to want to know that they're dealing with in a framework that will respect their ultimate investment. Macroeconomic stability, and that is very much contingent on the IMF program. And then third are the specific reforms, and I guess later in the discussion we can get into which reforms IFC would prioritize. But at the end of the day, it's also related to the investment framework. We heard that there hasn't been a successful privatization in 5+ years. The concession law has not yet been passed, but these are clear mechanisms that will enable foreign investors to put more capital to work.
Okay, Igor, I'm not going to leave you alone, so I think we'll come to you now. And unfortunately, Igor kind of stole your glory a little bit with your presentation earlier, but from an EBRD perspective, and I guess a regional perspective, actually, I make my own mistakes, I'm quite good at it, so don't worry, Igor. From an EBRD perspective and a regional perspective, I mean, how do you view Ukraine, macro, micro?
Ukraine, do you hear me? Ukraine has gone quite a long way ahead since the last revolution of dignity, and we see improvement in every aspect. However, still a lot needs to be done. And when we look at Ukraine as investor, we have to have in mind that EBRD is a different type of investor, so we're not looking only at return. Of course, it's important for us to have positive return on our investment, but EBRD has also a development mandate, and we are entering there where other investors are not ready to enter. So we have that kind of element of additionality with our investments. So we are taking investments that the market usually does not want to take or is not ready to take because of the too high risks. But in the same time, with such investments, we are trying to improve the environment in the country and to unleash some potential for private investors, so to attract other private investors and normal functioning of the market. This year we see a bit slower growth of Ukrainian economy. If last year it was 3.3%, this year 2.5%, and there are two major reasons for this. The first one is global environment, which is weaker. So major trading partners of Ukraine, which is EU, now 42% of Ukrainian export is going to EU. So this was restructuring of Ukrainian economy, which was previously based to Russia, but now it's based to EU. So this was some successful restructuring of Ukrainian export. EU economy is slowing down, world economy is slowing down, and this will certainly affect Ukrainian economy. But the other factor is domestic political uncertainty. We have 3 elections, and because of that we expected and we saw actually in the first quarter, investments are not going as fast as they were going last year. So there is some slowdown, and all this will lead to temporary slowdown of economic growth, but already next year we see stabilization of growth to around 3%. And here we come to the main issue, 3%. And this is approximately the potential of Ukraine at the current stage. But is it sufficient? Certainly not. Ukraine has to catch up. and it needs to achieve rates of 5%, 6% in order to catch up with more developed economies in the Western neighborhood and to compensate for what was lost during the previous crisis years. But to come to there, obviously we need some changes in the whole environment. And if we return to the previous panel, someone in the audience mentioned Greenspan words, what is necessary for a thriving market economy, stable macroeconomic environment, stable institutions that would guarantee rule of law and property rights, and open competitive economy. Do we have this in Ukraine? The first one, definitely we have stable macroeconomic environment, and here we have to price. I agree with what was said just now, and also in the first session, that National Bank of Ukraine is probably the rarest example in Ukraine of successful transformation of one institution. National Bank of Ukraine today is central bank like any other central bank in the developed world, and we have to price it for that. Their mandate is to preserve price stability and financial sector stability, and they're doing this job very well. Now there are complaints that okay, but credit growth is low, interest rates are very high. This is true, interest rates are very high, but these are just consequence of some other policies that were not conducted as they should have been done. If we go a little bit back, Ukraine had a previous program with the IMF, which was on $18 billion of inflow to Ukraine. Ukraine drew just half of that, half didn't, and the last tranche was in April 2017. Why the others were not drawn? Because some policies, which are mostly connected with governance issues, anti-corruption issues, were not conducted as they should have been done. Because of that, there was pressure on the market, and the National Bank of Ukraine had to raise interest rates, had to defend the inflation, and had to defend the stability of the exchange rate. So the key for the coming period would be to continue with relaxation of monetary policy that recently started. But and there is potential, because we see inflation next year to come close to the target of 5% plus minus 1%. They're on a good way to that target. So I don't see any pressure on the inflation front. I don't see any problem there. But in order to have National Bank of Ukraine reducing monetary policy rate, and with that causing reduction of the general interest rate level and more credit growth, which would support more economic growth, we need to see also stability on the political front. And here the key would be what will be the next moves. Certainly there were talks about some elephants in the rooms. We don't want to see some reversals in these areas. What was done in the banking sector was a successful reform. Someone in the previous panel mentioned that there has not been any other country in the world where half of the banking system was closed. True, but it's also true that there has not been any other country in the world where there were a lot of banks with 90% exposure to companies connected to the shareholders. So these two things are quite connected, and we have to look at them together. So we don't want to see, and we don't need to see some reversal in this respect, providing that there is this preservance of independence of the National Bank of Ukraine, so stable monetary policy environment. Then we come to the other two elements about thriving market economics, improved institutions which would guarantee property rights and the rule of law. And here there are many reforms that started previous years. Some of them were conducted, but not with sufficient speed. There's room for improvement there, and depending on the speed of these reforms, depending on the success we would see in this area, also depends the speed of economic growth. Faster reforms would certainly unleash some potential that Ukraine has. It has a lot of natural resources. Providing that businesses have level playing field, there's a good opportunity to lift the potential growth of Ukrainian economy to the desired level of 5–6%. But we need to see what will be the policies of the new administration.
Perfect. Just in terms of, I want to go through again the sort of investors and Markus and Andrei. I mean, I guess you are, you know, we're the same. I mean, we're sovereign guys, we look at plenty of countries. Right? And when you look at Ukraine, from the kind of risks, the challenges, and then the positives, you know, we do the same with every country we cover, right? I mean, you know, look at it and like, what do we like, what do we don't like? When you look at Ukraine, I mean, what are the big issues that really worry you? And on the other side of that, what are the things that the strengths of this credit on, I guess, from a sovereign perspective anyway?
Yeah, no, absolutely. I think, you know, if I look at it from a relative perspective, I think we do like Ukraine a lot as an investment story still. I think, you know, one of the strengths there is, and I'm actually referring back to the piece you wrote recently of smart.
Thank you very much for that one. Excellent.
I did enjoy it a lot, but I think it simply comes back to the point of, you know, trying to assess, you know, which countries, especially within that investment universe in which Ukraine is as well. You know, you have countries with still high external financing requirements over the next few years, and you have to look at countries, you know, which countries do have a anchor, especially an external anchor, right? Of course, Ukraine is not associated at this point with China, Russia, Saudi Arabia, and so forth.
Definitely not associated with Russia.
Of course, yeah, that was a misspoke. But you mentioned it as a country in your piece. But anyway, the point is that, you know, you do have an IMF program at this stage. At the end of the day, I think we are more or less in line with the next tranche requirement, even from the comments I took away this morning. Of course, with the enrichment law still outstanding, but I think we even see, at least on the edges, potential progress made on that. And I think that's simply one of Ukraine's key strengths still, if you look at it from a comparative basis, right? If I look at the same investment universe, whether it's Lebanon or, you know, Oman, even for that matter, you don't have an external anchor in any shape or form. Of course, Ecuador has sort of, you know, got its anchor now, but Argentina, despite it being an anchor, it's struggling a lot. So I think Ukraine, and I always think this way, if Ukraine continues to do continues to do the things it has done in the past 1.5 to 2 years, it will be just fine. If countries like Lebanon continue to do what they're doing, they will not be fine, as simple as that. And so it has an external anchor. It can potentially relatively easily finance itself for next year. And the risks around it, of course, is policy in itself. And, you know, what the new government does in order to keep that anchor in place. And of course there are risks, but, you know, even if I think about sort of the likelihood around that and, you know, noises that, you know, President-elect Zelensky has made in terms of the importance of the IMF, as far as I'm concerned, I'm relatively encouraging at this stage, right? We talked about populism ahead of the election. You know, there's populist talks everywhere. So even if you had Zelensky coming in and being previously anti-IMF, I always, you know, think that, you know, people at heart should be pragmatic, and, you know, once someone is in at the throne, potentially turns to be pragmatic. But even for Zelensky, I think we had already pragmatic rhetoric coming before I'm actually winning the election. So I'm actually relatively encouraged by that. And we've seen on a comparative basis other countries, we're not talking about reforms or external anchors in any shape or form. So I think that's as I said, the setup for Ukraine, which I personally still like as an investment.
Andrei, same kind of gig question.
Sure. So, I mean, I'd probably approach it a bit differently, and you know, perhaps I guess I'll do it. I'm not going to speak as AllianceBernstein, so we may be more nimble with our positions. And you know, when I look at sort of Ukraine trading now, I think my personal view is that a lot of that is priced in terms of the sort of positive disposition to Zelensky. So from a trading perspective, I probably feel there's maybe slightly more potential for a disappointment. And as a result, when I just think of kind of near-term upside downside, I personally think there's a bit more downside. And so for that reason, we're not necessarily sort of in the sovereign bonds. That being said, I do think that he's likely to be probably pragmatic, and that's what he's indicated. But there's still a big, I would say, unknown element of him, who the final team is going to be, what the program is going to be, and how what steps he'll take to try to get a majority in the program.
John, do you want to have a go at that one as well?
Oh, sorry. I guess I'll make a slightly different comment because I think Andrei's covered the relative value per se pretty well. But I think what's interesting about the last panel, which I often notice amongst oligarch types, is again, that's a broad figure, but a number of people in Ukraine is they don't necessarily understand, and this was certainly true of some members of the last government or the outgoing government. They don't understand the relative value on a global basis because actually Ukraine has to compete with lots of countries, as you were saying earlier. And it seems like often the pace of reforms in the last several years really disappointed. And that's probably why there's been still a significant amount of skepticism amongst foreign investors. So I certainly hope that going forward, and we have a clean slate now, nobody really knows what's going to happen in the next month, 2 months, 3 months, 6 months. So I certainly hope that the noises seem to be positive, and I certainly hope that we get a new impulse of reform, because on a relative value basis, Ukraine has, educated workforce that has a very low GDP per capita, has tremendous potential economically. I mean, some of these issues are addressed around more open competition and some of the comments you made, but it really depends on the political class getting the message that they have to make reforms and changes in a more fundamental way. And I think we saw it for a period of time, but then it certainly stalled to me. So I think it's difficult. I'm generally optimistic about the medium term in Ukraine, but I think it's difficult to be specific on the timing, and it does really depend on the next government picking that baton up and addressing it to try and raise itself in the global relative value space.
I'm the chairman, but I cannot use my advantage over the microphone to give my own view, right? I mean, is that allowed? You're not allowed to do that, right? I mean, when I look at Ukraine, right, I mean, the sovereign looks really cheap, right? I mean, I'm just looking at it, and if you look at ratios now, okay, it's been through a difficult 5 years, we're talking about corruption, oligarchs, and all that thing. But sovereign debt perspective, right? I mean, you now have, and relative to its peers, and guys like me, we look at Iraq, Tunisia, Jordan, Zambia. I mean, these are the countries we're comparing. RG as well, right? So you compare all those to Sri Lanka, right? I mean, this is it's kind of bucket that it's in at the moment. And I look at Ukraine now, and from a macro ratios perspective, it's got better ratios, right? I mean, fiscal. You've got 2-3% fiscal and current account, 2 to 3% fiscal and current account deficits, right? Public sector debt, it's at 60, about 60, sub 60, right? Kind of reasonable. You think of central bank, very credible. It's a big tip from me. I think it's a big tip from everyone on the panel, from the foreign investor panel. Whatever the oligarchs say, we like the central bank, we like their policies. It makes us feel comfortable in what to invest. Unlike places like Turkey, right, where it's a big cross, right? So we like that. It's about 20 billion of FX reserves. There is something of an IMF anchor, although it's been a tricky relationship, that one. And again, compared to that group of countries, Ukraine trading 8-9% looks really cheap, and you leave yourself thinking, why is this so cheap? And unfortunately, it was really cheap last year as well, right? And it got cheaper the longer you went through it. And I guess the reason it trades very cheap to its peers is, I guess, reflection is most people are long, frankly, right? Everyone came out of restructuring. We're generally long Ukraine risk, so we're in it, we're hoping for the best. Secondly, I think last year the torrid relationship with the IMF and the fact that Ukraine in the end waited for good news on the IMF, And then came the big issuance later in the year, and then we had Naftagaz and everyone else queuing up to do a deal later in the year. And it kind of killed the market a bit, right? And then obviously you got, I mean, they left it too late in terms of the electro cycle. So it kind of, and I get why they did it, but it, you know, in the end, you know, so that's kind of where I come from. I mean, you know, I can see value. You know, it's not traded particularly well. We're all long. But I guess the other elephant in the room, it's not P and it's not K, you know, it kind of is, in the end, the relationship with Russia. And I guess this morning, we had Andrei talking about the potential problems in terms of gas sector. He's done a remarkable job in terms of negotiating and getting one over on the Russians, if you think about it, the Stockholm Agreement, and, you know, a strong track record that we can have confidence with him. But, you know, I guess that hangs out there in terms of how this relationship is going to evolve going forward. Maybe that's something. But, you know, for me, it looks cheap. You know, we are invested. I want to buy into the Zelensky is the new Bolsonaro, but not the nationalist, kind of fascist. On TV, right? I need to be careful what I say. But you know what I mean? I mean, Zelensky could be a great story, right? It can be a great story. He's the anti-establishment, pro-liberal anti-establishment character. And if he has his own Guedes, which could, you know, we're looking for the team, is there a nice reform? I think that investors will really buy into that story, right? But we need to see the team. How it evolves, we need to see the relationship with the US. So, anyway, I've spoken too much as the chairman already. I think we'll move on back to Jason. And interestingly, Markus mentioned the anchor in terms of, I guess, the IFIs, which are commentary, and obviously World Bank, IFC World Bank, is a key part with the IMF. You're integral to that whole lending process. I mean, how do you view, I have to say, I also kind of disagree a little bit in terms of IMF story. I didn't necessarily sense from the IMF Resurrect commentary that the fund will be rushing to rushing to lend into Ukraine this side of early elections. My sense is they'll wait for after the early parliamentary elections, second half of the year. My sense is Privat is critical to whether or not they continue to lend. And obviously the illicit enrichment issue has to be resolved. So unless Privat Bank is resolved in a friendly way, and unless the illicit enrichment issue is resolved, and I think, unless we see the electoral cycle progress, I don't see IMF funding until second half of the year. But anyway, how do you work with the IMF? You know, how do you see official financing progressing? Maybe I'm wrong. Maybe I'm too pessimistic about that.
So I think there's both a direct relationship and an indirect relationship. On the direct side, I mean, the EBRD, IFC are doing multiple co-investments together, so we have an excellent relationship on the investment side. The IFC is the private sector arm of the World Bank Group, so we work hand in hand. The way it's meant to work and the way it is working is the World Bank will take the lead on policy reform, which is then meant to lead to more investment that IFC can help fund. With regards to IMF, I have a credit department as well. And so we look at our private sector investments similar to my fellow panelists. And if we are not comfortable in the macroeconomic climate, then we likewise will not participate as investors. So we are working together. The relationship is extremely strong in Ukraine, and arguably stronger in Ukraine than in many other jurisdictions in the region and even globally. As we speak, there's IMF, World Bank, EBRD, EU, US negotiations going on for the supervisory board of the state-owned banks, where the IFIs are very much in cooperation to make sure that the state-owned banks, Ukrexim, Shad, and Privat, have proper governance. So the relationship is very strong. I think the IFIs indeed see themselves as the fulcrum for reform, and we'd like to think that it's through our involvement that we will see more private sector investment in the country. FDI right now is extremely low. We saw the charts, but I remain optimistic that we will see more investment. We have a successful port sector investment in the Cargill, where Cargill is meant to come in the near term. We have 2 port concessions in the south of the country, where we have great interest from the Middle East, where we have great interest from the US and Europe. So we are seeing the right signs.
Can I just follow up? And also World Bank looks at the longer-term structural reform issues, IMF kind of shorter-term balance of payments, fiscal support. And we were talking earlier, you were highlighting that the World Bank has taken the portfolio for land reform. And this could be a really good news story, and actually it is a good news story, right? I mean, Ukrainian agricultural food companies seem to be doing very well. They've had, well, some of them have done very well. I mean, where are we in terms of land reform in this country?
This is nearly a 2-decade discussion, but I think in the recent history, we've started to see a lot of interest from. The good news is the small and medium-sized landholders. So I think they also see that there's, if and when the land moratorium is lifted, then this will provide opportunity for a number of things. It will allow these landholders to raise financing. They can use their land as collateral. It will also allow for agri-companies to scale up. Why invest significant resources if you have a lease? I think that's holding back value-add agri. And it's also holding back the banking sector because of the collateral issue. So if and when land reform is ultimately lifted, and we're not sure how, and there will be certain restrictions, at least at the initial stage, to ensure there's no land grab by the largest agri companies. But I see a lot of opportunity for investment in agri as well as the banking sector.
Follow-up question for you and possibly John. I mean, what is the problem, right? I mean, what is the problem? What has been the problem for 25 years? I mean, why isn't Ukraine more advanced? And where is the opposition coming from to this?
On land reform in particular. So I think, actually, if you go back in history, I only have the benefit of 2 years, but it's a sensitive issue in the sense of the way it's been pitched. And so I think it's largely just a misunderstanding of what land reform actually means, and a lack of articulation by government as to what opportunities this could actually open up. And with the proper media campaign, and we've already seen this, that I think when I came 2 years ago, you probably had about 20% of the population would have been in favor of the lifting of the land moratorium. The latest numbers I've heard are as high as the mid-70s.
Sorry, mid-70s, you said. Wow, interesting. And do you think it's vested interest? So, existing large agricultural companies that are basically doing really well in the current system, or is it politicians just a little bit scared by change? That they could suffer at the ballot box if they do something too radical? I mean, what is it?
So I think where we start to see the momentum, as I said, popular opinion actually gave the politicians an opportunity to actually lift, but what had happened at the end of the day was it was too close to the elections. So it's our hope and expectation that with the new administration, with the parliamentary elections out of the way, that we will see the opportunity of a lifting of the land moratorium in the near future.
John, I'm not sure you are an agriculture expert, but I thought
Perfectly well said. I mean,
okay.
I completely agree with the comments that this is really misinformation, as most populism is, frankly. So I think we've seen that where we live too, Tim. So I completely agree.
I'm going to ask a question. I did ask the panel earlier a question about official, what the West could do, to help Ukraine in this transition. And we all have lots of experience of other countries that have had IFI support, etc. I mean, are there any lessons for other countries that we look at that could be interesting for Ukraine, or in terms of managing the transition? I'm not sure. It's a bit out of the box there. So if you don't have an answer, don't worry about it. But are there any other country experiences where? I mean, you mentioned my paper about sharp power, but anything we're missing here in terms of Western support for Ukraine?
In terms of additional Western support for
the way they're doing it, coordination between donors, or, an interesting question is, I guess the IMF has been criticised for playing really hardball with Ukraine. If you think of last year, the 18-month delay in lending, were they too soft? Too hard? Should they have been a little bit softer in terms of conditionality? Or do you think that, they got it back right? That they're kind of trying to push reform forward. It's a difficult story that there's lots of vested interest in. I think someone, actually Alex Danilov said that he possibly thought the West maybe should cut them a bit of slack here and there occasionally. Do you think that's a fair comment?
On that particular point, I think the IMF has been pretty lenient if and when it was actually necessary, right? Because if you think back last year, of course, they only came to Kiev once, the gas price hike was done back of fourth quarter, as well as once we had assurances that the anti-corruption court issue was sorted out. But then, I think the fact of the matter was that you didn't only have the fifth tranche of the EFF, but you actually had a new SDA program, very, very easily negotiated, and with the very few that Ukraine can go into the 2019 elections with a full IMF program in 2019 in place. So I think back at the end of 2018, therefore, I think the IMF did not go above and beyond what it should have done, but it definitely was relatively lenient in terms of how easy it was for the Ukrainian government to negotiate that. And I think it probably remains to be seen. I think we've seen on several occasions that actually the IMF has been relatively flexible with its targets of individual tranches. And I agree that there's question marks over the next tranche, but also I think the actual targets for the SBA at this stage are relatively easy in terms of fiscal discipline, so on and so forth. So actually for the SBA program this year, and once the enrichment law is sorted out, and that's probably only after parliamentary elections perhaps, but I think the program overall and the targets for that for this year are relatively easy to achieve.
Anyone else want to answer, John?
I think it's not about the IMF, but I think one of the big problems that Ukraine suffers from is, ironically, and I see this all the time, is being lumped together with Russia and the sanctions situation. So the sanctions are drafted in such a broad way that when as Stefan said, when he goes to the city and sees other investors and mentions Ukraine, people look at him cross-eyed, all of us cross-eyed sometimes. I mean, many of the mainstream investors, because I think their compliance departments have assigned the same risk in Ukraine as there is in Russia around sanctions. I find anyway, and I think that the sanctions are necessary in I guess because there's very few ways to combat the Russian aggression that are credible, I guess. But at the same time, they're so poorly drafted that often Ukraine gets caught on them. And I think we've had a number of occasions where we've been wiring money from a Ukrainian account and it's been stopped for a month because someone, JP Morgan sanctions control and the money things stopped it to look at sanctions. I mean, and it's a Ukrainian, it's not a Russian transfer. So I think that's a big issue that we somehow need to figure out how to differentiate. And I don't know, maybe it's Western governments, or maybe it's a combination of Western governments and working together with the Ukrainian government, but it slows down a lot of, I think, investment appetite, actually.
Yeah, I'll add a bit on the IMF. I don't think I'm going to be as specific probably as Markus, but my impression there's a very big push from the IMF and IFIs to try and keep Ukraine on the path. I think they get frustrated by them time to time. But I think when push comes to shove, it's probably more likely to cut them slack than not.
Can we move to local markets? We're invested. I think, Andrei, I think you said you were. You have been, or Markus, you're in? You're not in local markets at the moment. So Andrei, exciting, interesting, and actually, you're also involved in Egypt, I think, local, right?
I have been.
You have been, allegedly, right? When you look at the development, it's quite exciting this year. Quite a lot of money's coming in, right? It creates new opportunities, right, for the Ukrainians in terms of their financing options. How do you view that, risks, opportunities, all that kind of stuff?
So, I mean, I guess one of the things we consider is also liquidity in the markets. I don't think the market's been fully open. So I think our access, we went into an access product several years ago. Unfortunately, got hit by the FX from back then. And the problem is with those access products, if you want to get liquidity, you're speaking to one guy, and they can help you out.
Concorde, obviously, right?
Help you out.
It's got to be Concorde.
It wasn't them; they're not going to do. So I think there's an extra added layer of risk that you take when you're going into a market that's not, let's say, fully convertible. There was the attempt at the Ukraine, the bank, getting the Eurobond, Argentem Bank, getting the Eurobond. To be honest, I lost track of where it's trading now, but the problem with that one, it was relatively small in dollar terms, maybe 200 million or something like that. It never really managed to get traction in markets or trading. So the liquidity wasn't there. So if you wanted to buy or sell, it's 4 or 5 point bid offer spread, and so it becomes almost an impractical way of accessing the market for let's say these players like us. Now if you look at the market, I think I'd probably overlay it with our broader view on Ukraine and even the Eurobonds. Right. So right now, would I go into something illiquid with potential heightened political risks on the near horizon? I wouldn't. Maybe if for someone who's taking a much longer-term view and is willing to ride through that volatility, the underlying story is interesting so long as the politics can carry it to the next level.
Do you want anything, Markus? You're not invested, so I feel we have to answer that.
We did look at the beginning of the year look at that as well. I think one of the issues then, liquidity set aside, is simply you also have to analyze in a lot more detail central bank policy than you would have to do on if you invest in US dollar bonds for Ukraine. And especially going into elections, I think we simply have a concern about central bank independence and what a potential Rodzianko victory would mean at the time. So I guess, and it also comes back to the point that I think local markets are obviously a great opportunity for Ukraine to attract foreign investments additionally, and they have been actually very successful so far. But I think for Ukraine in itself is a double-edged sword, right? Because obviously I think Ukrainian markets, especially currency bonds, of course, become a lot more volatile and also become potentially a lot more, will receive a lot more scrutiny from policymakers, not only from government and fiscal, but also from the central bank. And so any concerns about central bank independence and its mandate obviously need to be taken very, very carefully by the government.
Sure. Question for anyone on the panel. Do you think it's possible for Ukraine to come to the market before elections, before Privat Bank's resolved? Do you think that's possible?
So just one intervention here. I'd be curious to hear from the other panelists as well. But as of this morning, actually on Monday, we issued our first debut local currency bond. And got a rate that I think we were surprised, 15.75% 1 year instrument, which to me means that granted we're AAA, this was an offshore issuance, but there clearly is appetite for local currency bonds. So this was a test, but our view is that, and this is an instrument that we want to use because we have clients who are very much looking for local currency options. So we were excited about this issuance.
I'd be surprised if it was so low or so high.
Compared to where the sovereign is trading, this was a very good one.
Andrei, if I may have a question, regarding this local currency bonds.
The answer is I should have traded with Concorde.
No, could be like a short-term oferta an answer to this liquidity concern?
So the question was like, we discussed the liquidity concern here, but regarding the local currency period, shouldn't be like 6 to 9 months oferta good answer to tackle this concern?
Yeah, I think that obviously helps to bring the liquidity forward. But for the banks, it's probably less interesting because they need some funding certainty to be able to lend for a few years out. But yeah, that's one way of dealing with it. It's less common on the Eurobond type of green instruments, but as the local market gets more developed and it gets more accessible to foreign investors, that makes a lot of sense. And that's very common in other local markets.
I guess unless someone else. I mean, might just come on local market development. I mean, I think it's quite exciting. We've seen a lot of inflows, a lot of foreign interest. People like the central bank, very orthodox. They do buy the line that inflation is going to drop. I guess the Ministry of Finance, Butzer, new debt management office, they're selling a good message, good story. What's positive about it, the plus from it, this big inflow, this big foreign inflow that we've seen in the last, first quarter basically, is I guess one of the big concerns, which I think was mentioned by Markus, is we all know Ukraine has a very significant short-term external debt service burden this year, whatever it is, $5-6 billion, right? And I guess the fact that they are looking to fund it, and Ukraine's problem is it's not the stock of debt, 60% public sector debt GDP is not crazy these days, but 2/3 is external. The fact that they're on the front foot, they're thinking innovatively, they're looking to increasingly fund their service burden with foreign inflows is really positive, really encouraging. It probably means they less need to come to the Eurobond market. I mean, that's the message they've been selling us. At least less need to do dollars, probably come to do a euro issue. I guess the big concern would be, liquidity again. There's a huge inflow, or significant inflow. What happens if Argentina blows up again? Or Turkey, more likely Turkey, right? And that money wants to come out. And I think it'd be quite interesting. I mean, the comparable would be Egypt, which, the way the central bank has helped investors come in and go out in terms of those flows, would be definitely the one to watch and would help us reassure things. It doesn't necessarily help. I mean, Egypt's very positioned with seeing some sizable moves there as well. But I am certainly encouraged by what's going on in terms of investing in that market. They're doing the right kind of things. Debt manager office is definitely a good idea. I'm going to think outside the box a little bit now because we have 15 minutes for questions, but I'm going to go early to questions, if that's okay. Is that okay? And I'm looking for some really exciting questions. So we have ladies and gentlemen going to run around the room with mics. Oh, lots of questions. I like questions. This is great. An investor. Another one.
David Niedersbach from Pellmar Assets. I have a question about Privabond. Actually, two questions. One for more for IFIs, one for investors. So first of all, during the nationalization, basically two debt obligations have been written down: the cargo loans and the bonds. The cargo loans have been reinstalled and have been paid after some pressure together with the US Embassy, while the Eurobonds have to go through all the court processes to get the money back. To the IFIs, how would Ukraine or IFIs, or kind of influential institutions here, allow this to happen, kind of a different treatment of creditors? And the second question is more to the investors. We never see in the history of emerging markets that senior bank bonds have been written down without the bankruptcy process. Never happened in emerging markets. I don't recall this. My memory goes back, let's say, 15 to 20 years, but I talked to a lot of people. It never happened. Is this kind of a new risk for emerging markets that suddenly governments decide, let's pay in senior bonds, as if we all have basically AIG, UBS bonds, Bank of America, I mean in 2018, I mean there's no legal model for this. And nevertheless it happened. Now we have to go to court and go through the whole process. I'm just curious about the opinions of the IFIs and also the investors.
Okay, the IFIs. Opinion is required.
Okay,
I don't have the full answer, but I will say just one thing regarding private bank. Private bank, before it was being nationalized, it had negative capital, so it means it has to be closed. It would be closed if it was not systemically important. And if it was closed, what would happen with this bond?
Yeah. Fortunately, I'm not a corporate credit guy, so I can give it to you, Andrei. Perfect.
Sure. So I think the first, just to answer the question, does it have an impact on how we price bank risk? For sure. In Ukraine, 100%. In other EU countries, there's some transmission as well. So I think the unfortunate reality is that probably has slowed down any private banking sector revival in terms of access to international markets for the foreseeable future. Right? We haven't seen any private banks do any bond deals in Ukraine, and we probably won't for quite a few years to come. So that's on that question. I guess just to respond to the, yes, it may have negative capital. I think the point of the question was more than just that when you do a restructuring, a bail-in, any kind of a resolution process, there has to be a overarching concept of equity and fairness. And I think the question was more sort of why was that not observed in this case, or why was it allowed to go on? So
I take it you are an interested party. I mean, look.
The question remains the same. I mean, why would IFIs allow Cargill to get regulated at the same time? I mean, the basic question is, simple question for IFIs. Why, beside all the problems of crypto, why was Cargill allowed to get the money back after they had bought the US embassy, while the bondholders without the US bank have to go through all the court processes to get the money back? We still have confidence that this will happen because there's no legal basis for this trading, but that's the court side. But I'm interested in IFIs. Why was this allowed to happen? Just get the money back with US bank. I mean, this is not something that investors consider as fair and transparent.
I don't have an answer. IFC was not a party to the transaction. We don't have a particular opinion on the subject.
Look, we were all kind of sniffing around Privat Bank prior. The bonds were very interesting at the time, I seem to remember, and I guess we're all grown-ups and we went into it knowing the Privat Bank story. I think it was pretty clear. We weren't invested in the run-up, but I think we all made our judgments in the run-up to that restructuring. In terms of equitable treatment, it's not always the case. I don't think you've been following the Bayesian restructuring in sovereign space, where I think creditors have been treated very legally, right? So I don't know. I mean, we can debate that after. But anyway, other questions?
Hi, my name is Alexander Lubrick. I represent Economist, the biggest exporter in the company that pays the debt. First of all, John, thanks for mentioning us in terms of some of the good things we did in the past. Maybe the question to you guys, and not really remembering like Mr. Bachmatyuk or someone else who doesn't have the auditors, if the good companies are really appreciating their obligations and performing well, will be still an excuse from your side for not decreasing the interest rates coupons and return on the investments into our papers and still keeping it like some of the guys that seem to me said that you still earn money on us, so is it just like still possible that there will be differentiation and there will be certain distinction and approach to some of the names from Ukraine or Ukraine itself, while some of the corporates will be still behaving in such a way? Thanks.
Anyone want to take that one? Andrei?
Sure. Well, I think you guys already trade better than the average corporate, so...
it's not about trading, it's about real.
I mean, if I understood it correctly, it's is there a possibility for more differentiation between the good corporates and the
new deals, new placements, new attractions?
Sure. I mean, look, I think the reality is the companies here, they still have a pretty, let's say, high-yielding sovereign curve to contend with and deal with, and until sort of you get sovereign yields down it's going to be very hard to have sort of the kind of differentiation that you're looking for. Obviously, once you do have more of a normalized, and let's say you move the sovereign from a B- up to a double B, that becomes a completely different story, as we see in other markets. So, I think you've already traded under the sovereign. I think there are only a handful of Ukrainian companies that still do. I think the other reality is probably on the corporate Eurobond in Ukraine. We really only have the good companies left. There were a lot more issues, and a lot have fallen through the wayside or gone through various restructurings or litigations in some cases. So, I think you are probably one of the top few companies out there, and you're already trading through the sovereign, but getting a lot below that, unless you manage to change the perception of becoming a completely international company, is very hard to do.
I mean, I think the market will definitely differentiate good from bad companies, and that's obvious. The difficulty is if you're borrowing FX, right? If it's an external liability you're taking on, right? I mean, if the sovereign mismanages the macro, like 3-4 years ago, the exchange rate will adjust and reserves will go down, and you won't have the FX liquidity to pay us back. So we're obviously going to take the macro into consideration as well, right? Other questions?
But if you really want cheap money, you should speak to the advisor.
Maybe a little intervention here. EBRD is investing a lot in such type of companies, but on the other side, EBRD does not want to compete with the private sector. So if there is interest from private sector to invest, then we don't want to go with dumping price and to kill the market. But in some circumstances, when project is very interesting and there is some elements that the private sector is not very comfortable with, and because of that is charging higher price, EBRD might engage also in that project to support in order to reduce the risks, but together with the private sector, which in that case would reduce their rate because EBRD would already take some excessive risk that the private sector is not ready to enter into. So we have this additionality aspect that it should always have to be bear in mind.
Okay, question over here.
Ruslan Boshko, Concorde Capital. Thanks to our moderators, we had quite a few opinions regarding what's been happening with the banking system in Ukraine. Some of them they're positive, some of them they're negative. We heard the way it was done, we heard the way it could have been done. My question to you, being an international investor, what's your perception of what's been happening with the banking system, whether it was for good or for bad for Ukrainian economy, and what are the key challenges for banking system in the future? Thanks. In particular, I will address my question to Jason.
So thank you for the question. I personally am actually on the bullish side of where the banking sector is heading. And I say that for a number of reasons. The legislation that has just recently been adopted by Parliament and signed by President with regards to NPL resolution. And we heard that there is interest from some colleagues up on the panel to get more involved in distressed asset workouts and restructurings. And I think the legislative framework has come a long way and does allow for such opportunities. The bottleneck now is not so much the legal framework or trust in the judicial system. The state-owned banks more broadly and the strategy that's now in place to ultimately privatize at least Ashad, Privat, and Ukrgazbank and Ukrexim, I think remains to be seen what's the longer-term strategy. But the supervisory board process that's being put in place, the governance of the state-owned banks. And then in addition to that, IFC has been working directly with Ukrgazbank, where we aim to help Ukrgazbank ultimately go private, and we think that this can happen in the relatively near term. Again, just the fact that the NPLs are at least nearly fully reserved, I think also gives us comfort that in the event of macroeconomic shock, the banks, and thanks to the independent MBU, which you've heard from everyone today, is a proper functioning institution. I think the banking sector is extremely resilient in the event of again, macroeconomic shock. So I think the banking sector is in good position. The next big fundamental change will be the privatization of the state-owned banks, and Bundesbank is in a leading position for that to happen.
Maybe a few words here. What happened in the banking sector was very good. Restructuring was excellent. However, it led to excessive state ownership in the banking sector, and now IFC, EBRD, other international financial institutions, we are focused on privatization of these banks. The first step is commercialization, which means improvement of corporate governance in these banks, but the ultimate goal is certainly privatization, and EBRD is ready to enter first in the pre-privatization process, so participating with some equity in these banks, supporting with credit lines, but also when there will be strategic investor in these banks to participate in the process, and then EBRD to leave all alone and to leave to the private sector.
If I could just add, so I think the intention was the right one in terms of cleaning up the banking sector. My view is that when, I think this has come up a bit, but when you're going to impose losses on creditors and maybe not do it equitably, or at least you have a framework and a solid plan in place, and someone has to take responsibility for it properly. And I think that was, let's say, one of the disappointing, and perhaps to me, just a sign that the institutions, I think they got in a bit ahead of their shoes, and they probably could have used a bit more help and guidance from, say, international institutions of, say, okay, you're going to do this, here's how you do it, here's how you do it in a fair way, and work with them closer on that. So that's my own view. And then in terms of where the banking sector is heading, personally, I still think there are some potential risks, especially if you look kind of over the years, right? So the next time you have another Gudivna move, there is a potential again for further sort of asset quality problems, and that's what I would be concerned about. But generally, it is about moving it into the private hands. And my view is, if it was done in a more systematic, professional way, you could have done that much quicker. But now, you're dealing with kind of loads of lawsuits in Ukraine internationally, and it's become a pretty messy situation.
Maybe I'll just add, hindsight's great. If you go back to that period, 14, 15, 16, the Ukrainian banking sector was bankrupt. Let's not beat around the bush, right? It was finished. Right? And you had the Privat Bank, the largest systemically important bank, with a huge capital hole, right? Now, it was interesting this morning that a comment was made about some depositors lost some money, right? Let's imagine a scenario where Privat Bank wasn't nationalised, the state didn't step in, and the owners had been asked to recapitalise the bank and thus far hadn't. There was a chance of a major crisis of confidence around Privat Bank and the whole sector. You would have had a run on Privat, a run on the whole banking sector. The result would have been massive exchange rate depreciation, hyperinflation, and everyone would have lost their deposits again, right? That's the reality. Now, former owners are obviously not very happy about it. They had their opportunity to put their money on the table, get the money out of their pocket or wherever they keep it, put it on the table, recap banks, right? They didn't do that. They had the opportunity, they didn't do that, right? The guys at the time had to make really difficult decisions when lots of other things were going on, and probably some procedural mistakes were made. But I think the decision to nationalise at the time was absolutely the correct decision, and a very brave decision. Arguably, it should have happened a year earlier, right? And the way a sovereign guy, when I look at Ukraine or look at any country, it's a pretty simple process, right? Any country in the world we look at, right? It is box ticking, unfortunately, right? So I look at Ukraine, I think public finances, good, bad, tick. Balance of payments, good, bad, kind of okay, tick. Banking sector, is this it's a huge threat to macro stability in the country, right? 4 years ago, absolutely, right? The health of the banking sector was a reason that no way we would have touched Ukraine in 15 and 16. Now, it's kind of a tick. We feel comfortable with the state of the banking sector. It's not a reason not to invest in Ukraine, right? So, you know, easy to be very critical with hindsight. And remember, again, I always say the case. If you look at these bank restructuring processes, wherever they've happened, are typically very painful. You have very powerful individuals involved in it. And I'm looking at other examples. I always use the case of Serbia and actually Russia. You know, you've had central bankers who have been killed for closing banks. The people who did it are brave people, right? Full stop, that's the story, right? They did something very, very difficult. It's a question of fact.
Yes, hi. My name is Markus. I'm with the Real. I wanted to touch on that point you made just now, Tim. How does the panel see the risk of that happening if PFBank is the nationalisation, PFBank is reversed? That's the first one. The second question is to the IFIs. Judging from your, I would say, relatively soft answers to the questions about PFBank and the uneven treatment of creditors, should we expect that the IFIs will not leverage their strength to influence Ukraine to avoid a reversal of the nationalisation of the bank?
Great question. I wanted to ask that as well. The follow-up, fantastic question.
I'll start with the latter, since that was addressed particularly to the IFIs, and I think I won't speak for the EBRD, but I think you'll hear from all of the international financial institutions in country that there's no tolerance for seeing Privat go back into a process that would cause the reversal of all the good that has happened as a result. And I think you've also heard from the IMF that is also a red zone in terms of their engagement. We would all be severely impacted if there was a change, and forget about the IFIs, the signal it would send to the market at large, I think would be so drastic that this is something that we do not expect to pass.
Regarding private bank, EBRD reacted, I think, the same day when the judgment was announced, and it was quite a strong statement in which we said that we regard the way how the private bank was dealt with in 2016 appropriate, and that every reversal would be hugely damaging the financial stability of Ukraine. And we stay to this statement, and we coordinate all our policies having in mind this. So we don't want to see reversal there. We see it as a final solution, like in every other normal state.
Yeah, I don't think a reversal of the nationalization is likely. I think there's some talk about it, just given the potential links between Zelensky and Kolomoisky, which aren't really confirmed. But so I think there's probably more rumor to that than not. I think it's a normal process for, let's say, these court processes also to play out. Thus far in Ukrainian courts, there have been a lot of decisions against the bank. I think the plan there is really to take things to the Supreme Court and get the right decision. And so that's part. I mean, that's just on the equity side. Then obviously there are other claims that are running alongside of that. Those will all be dealt with separately. So there are matters of local law versus English law and other things that are more, let's say, complex for this discussion.
I'll be very direct, right? I think I agree with you. I think it seems unlikely, but in a scenario where Privat Bank is denationalized, right? I think we would not feel comfortable investing in Ukraine. I would not feel comfortable investing in Ukraine because if it's essentially given back to private owners, then there's a fiduciary responsibility, I guess, from the Ministry of Finance to pull its equity out of the bank. So the 5% of GDP that was put into Privatbank will come out. You have a bank that is again insolvent. So the former owners will have to come up with whatever it is, $5 billion or whatever it is to recapitalize the bank. So you'll have a situation where the bank is bankrupt again, major chance of a bank run, major chance of big exchange rate pressure, hyperinflation, all that stuff, and we don't feel comfortable with that, right? And also, it's pretty clear to me that in a Privatbank denationalisation, the IMF will not lend to this country. So that's the reality, I think. Would you invest in it? Do you disagree with that?
Yeah, I agree. I think the costs are too high to do so, and you can't go back on something so big, right, without having huge repercussions with the ADFIs and foreign investment.
Okay, maybe chance for one more question, if there is one. At the back.
My name is Sergei Skurik, Dolphin Finance London. I have a very simple question, but I think a very important one for the panel. So far today, no one has talked about geopolitical risk. We've talked about every other risk out there, but would you not agree that in 2014 it was the geopolitical risk, a third of the GDP, it was the geopolitical risk that made people from in great corporates restructure and stuff like that. So what do you, honorable gentlemen, think right now for the next 12 months geopolitical risk for Ukraine is with this president in his seat? Thank you.
So, easy question there, Markus.
My personal take on this is that I think the geopolitical risk should be relatively limited, in my opinion. I think if I look at, there's clearly an incentive for Russia to test the new president-elect. And I think the issues of passports, I think, was one step towards that, but I think the grand scheme of things, was relatively limited of what Russia did in that respect. And the way I see it also with Russia involved in Venezuela, and with regards to relation with the US, I think, to some extent, the Russian government is cognizant of escalating anything in eastern Ukraine. I think would be a significant red line, and I think would garner significantly more bipartisan support in Congress and Senate for legislation. I think yesterday we had the sort of third legislation coming out in Congress in terms of sanctioning Russia, so that so on and so forth. Of course, that is a lot more related to election meddling. Nevertheless, if something happened in eastern Ukraine, I think the bipartisan support in both Congress and Senate would flare significantly more so. I think making a much bigger risk. And I personally think the Russian government is very cognizant of that. When actually there were potentially, especially because when they started trying to normalize the situation.
So, I mean, my view is that, I don't necessarily see things getting a lot worse. I think that, Russia's not necessarily incentivized to do that. I think, as Markus said, there are other sort of problems and flashpoints that are being dealt with. And if anything, I think Zelensky potentially brings someone new to talk to who doesn't have as much baggage as Poroshenko has. So, there may even be, to my view, somewhat of a cooler-headed discussion about what the relationship should be like in the future. So it's too early to tell, and clearly, I think for now it's sort of politics and the political position you need to take has been in the driving seat, but it does give sort of a new potential impetus to, let's say, talks and potentially cooler-headed talks.
Just a couple of points to add, I guess. I think I agree with the other panelists that the risks from Russia seem low to me. I don't think there's an appetite to expand operations. In fact, I suspect that if there could be a way out of the Donbass situation, the Russians would probably like to do that, but I'm not sure what that is, that it faced it anyway. I think there's some other issues that affect Ukraine that are important, and we heard about some of them earlier from Mr. Kovalev, the Nord Stream 2 situation and Germany's response to that, and transit of gas and the impact on GDP, that's an issue and it's unresolved, and I'm afraid that the German self-interest is quite strong. So I think that's a concern that we're going to follow. The U.S. election season makes me wonder, I think the President of the United States cares less about Ukraine than other constituencies, but there is certainly significant support in Congress for Ukraine. So, and balance, I think the U.S. will remain supportive, and so there doesn't seem to be a risk of a change there. And in fact, I think the U.S.-China trade war and some of the other things that the U.S. is engaging in other parts of the world are opportunities for Ukraine potentially as trade flows change and things like that. So to me, it's more of an opportunity. But I think it does highlight, all this uncertainty in the world does highlight again the importance of the Zelensky team and the elections happening in a way that reforms are actually first on the agenda again, because there's going to be a lot of noise and Ukraine can easily get lost in the agenda with that sort of situation. So I think the risks are kind of almost in the hands of Ukraine as much as anything, except for maybe the Nord Stream 2 situation.
That's very well said. We're out of time, but there was one question over there, if you're very quick. No? Okay, no interest. So we'll wrap up there. I'd just like to say thank you so much for the panel. I mean, you've answered all these questions from all angles. Very informative. And actually, Igor, fantastic day. Really enjoyed it. You've done fantastic. All the panels been great. I love this. You've got to do this oligarch panel every year now. And it's got to get better every year.
What a marvelous panel. Thank you very much. Thank you very much, our guests. We came to an end, but it's not the end itself. I hope to see everyone pretty soon for sort of entertainment, but also keep in mind that you're welcome now. So for next investment conference, which will definitely take place right here in Kiev in 12 months, hopefully in 6 months, so the next autumn season we'll catch up again. And thank you very much. We're at your disposal anytime. Thank you for visiting Kiev. Well, it's good sometimes to come and see it, smell, as I said. And we'll keep you updated on what's happening here. Thank you.